Hello everyone, it's Daniel here from Infovest. Hope you're all doing well. So, can we officially now say that we are in a recession? Can we make it official? Well, let's look at today's data. Today's data, we had ISM manufacturing numbers come out, and the numbers basically came out at the lowest level since May 2020. So let me pull out the numbers here. All right, I got the numbers here. Let's take a look at how the numbers came out. So the ISM manufacturing PMI came out at 46.3 versus the expected number of 47.5. So for those who don't know, the ISM manufacturing numbers are numbers that tell you that how the manufacturing sector in the United States is doing. Generally, when you get a number that is above 50, tells you that, hey, you have expansion happening in the economy, which is a good sign. But any number below 50, it basically tells you signs of contraction, right? Which again hints towards if the economy is contracting, you probably, and it's just contracting for a long time, you probably got some sort of recession on your hands here. Now, the headline number that came out did come in lower than 50, came in also lower than the expectation. So the expectation was 47.5. Actual number came in at 46.3. Now, this number of 46.3 usually is a number that you tend to see, especially when you see previous datas out there, you tend to see 46.3 be a number, according to history, that 75% of the time when we hit this number or lower, we tend to actually be in a recession. We tend to see the recession follow just right after, maybe a month or two or so on. And again, the fact that, the economist takes time in terms of determining the actual recession, we will see them call the recession after many months later. But can you say, after looking at today's numbers, that you can make it official according to data, according to what has been shown in the data, in the history, that 75% of the time when you look at whenever the number has hit 46.3, that's 75% of the time that we tend to start the recession or be in a recession when this number comes in? Can you say that this time is true? I think the odds are in that favor that, hey, I think it wouldn't be such a crazy concept or crazy idea to say, hey, that we are officially in a recession. Now, with this number, right, let's not forget, over the past 5 numbers, the past 5 reports, we've seen this number below 50. So also another sign that we've been in contraction for the past 5 months. We're still in contraction over the past 5 months, and we continue to see the number get weaker, which is telling you the signs of contraction is getting worse and worse. It'll be very interesting to see with all the developments that are happening, especially after the bank stress, the bank runs that we saw, the regional banks. It'll be very interesting to see a couple months from now how this number looks like. And it wouldn't be surprising if we see a lower number in a couple months from now. Now, with this number, we also get other components. We get the employment numbers. So the ISM employment came in at 46.9. The expectation was 50. So a very big drop there, showing weakness in the employment components as well. The new orders came in at 44.3. That's the actual, and the expected number is 49, so way lower than the expected. And the prices component, which is really, really, really important, because that tells you about the inflation story, right? So the inflation story here, expected is 51.2. We got the number below 50, which comes in at 49.2. So you're seeing the prices component come in a little bit more softer than expected. But however, the growth component, when you look at the new orders, the employment, the headline coming in really, really weak. Prices still, somewhat elevated in certain areas, but however, you are seeing the weakness in the prices component for ISM. So what does this tell us here, right? What can we say with these ISM numbers? What can we say about the economy? The biggest thing is that, hey, yeah, I think we've started, we can officially say we are in the recession, even though people or the economists may not call it right now. They tend to be very late and they call it out very late in the cycle that, hey, we're in a recession now. But I think from looking at the ISM numbers, after having these numbers show 5 consecutive week headline numbers, you're starting to see that the whole report was completely negative in terms of the economy. Prices component starting to come weaker, softer, which is telling signs that, hey, yeah, weakness in the growth is now also seeping into the prices component. But yet there's a lot of work to still be done for inflation, for prices to come down, and we're just seeing the beginning of this recession. This is just the beginning. This is just the beginning. We have yet to see more, and we have yet to see maybe in the summer or late in the summer or maybe September how this will all pan out. Now the markets, how the markets reacted, we saw bond markets completely rally on the day. Gold completely rally. We saw the stock market initially rally but then sold off, right? We also had the news about the oil markets as well. Oil was a little bit more, it had a little bit of sell-off, but not as much because of the oil OPEC cut, right? So the signs are there that telling you that the recession trade is on, right? You had the fears where bonds were going up, gold was going up, equities rallied and then sold off, right? It rallied on, okay, weakness is good, so that means some sort of easing's coming in. But however, we saw a turnaround in equities right away after that, and bonds continue to make new highs, all off this fear. Now, the yield curve, on the other hand, was basically flattening a little bit more. So that means the long end of the yield curve, the long end was pushing up higher in terms of the prices, the yields coming down. Short end, not so much, because of this fear. Because of fear-related news, because of the fear that creeped in after this report, that, hey, this signals recession, and we haven't got any signals from the Fed that we're getting rate cuts, which is causing the long end to move up and lead the way compared to the short end of the curve, which is not going higher or as high, or not leading the way like the 30-year or the long end. So that's why you saw the long end go up, but overall the whole bond market was up, which was signaling fears. Now it's going to be interesting how this week ends up being in terms of the data, how the markets react going forward, and it'll be interesting to see that, hey, we're starting to see the starts of the recession, the cracks and whatnot. How bad does it get? When we look at the previous ISM numbers at 46.3, right? We see that the numbers go lower and lower after it hits that number. Can we see the same thing in the coming months? That will be really important as we observe this situation here. So let me know what you guys think. Leave a comment below, subscribe, hit the like button and the bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.